Good day, MEC 3702 students. My name is Busi Huma. Today I'm discussing. Please take note, this podcast is not for sporting purposes, but there are key things or areas we would like to highlight to you. This podcast assumes that you have read the relevant study material relating to capital budgeting, and also you have prior knowledge from MEC 2602 relating to some of the capital budgeting techniques that you've already studied. It's advisable to recap your notes to make sure that you still remember all these techniques. Please take note of the level of testing for the relevant chapters within this topic. What is capital budgeting? Capital budgeting is a decision tool in financing which will assist management in deciding if a project is financially viable. So your management will look at your cash inflows and cash outflows relating to that project rather. These are the techniques that we'll look in detail within the subjects or within the module. Please make sure you go through your textbook 8th edition and your study guides as well. In your textbook is page 187 to 199. How to answer capital budgeting question. You must always remember that you will be tested on either buying on an expansion of a project, and you need to be able to calculate using the various techniques. Use a checklist as suggested below in working out your capital budgeting questions. If you go back, reading, make sure you read your questions properly and engage with your question, taking note of what type of company you're working with, products being sold, management leading style. Those can help you within your questions as well, even in discussions. So first example, annual capacity of a plant and equipment will be 120,000 units spread evenly throughout the financial year. So we assume here that the project is for 2 years and production resumes 1st of February 2017. So in 2017, there's only 7 months of the units that will be produced. So you need to make sure that you identify that and calculate it accurately. Secondly, it's relevant costing. Students really struggle with identifying the relevant costs. In this example, the existing factory manager, currently earning 150 per annum, will also be responsible for a new industrial sewing system. However, the company will now pay this factory manager a salary of 16,000 per annum. So the cost, or the relevant cost that is applicable for capital budgeting, is the difference between 192 and 150,000. So that will be carried into your capital budgeting calculation. Thirdly, as I've indicated, your cash flow calculation. Students not clearly indicate their calculator inputs. These are easy marks and principal marks that you must always make sure you put in your calculation. The other one is taxation. Remember to bring down your already calculated net cash flows into your tax calculation. Depending on your given information, show your separate calculation for equipment and scrapping value. Take time to read or listen to these videos that will help you for capital budgeting. Thank you and happy studies.